Hey there. Did you know that trading stocks is a bit like trying to tame a wild, bucking bronco at a rodeo? One minute you're riding high, feeling like a champ, and the next you're face first in the dirt wondering what just happened. That's where Alexander Elder, a trading legend, comes in with his 3 M's: mind, method, money, to help you stay in the saddle. Today, we're diving into this framework to make sense of trading, investing, or even just managing your cash in a way that's so clear even your cousin who's glued to TikTok could get it. Let's meet our friend Bob, a guy who dreams of making it big in the stock market, and see how Elder's 3 M's can keep him from crashing and burning. Picture Bob. He's your average dude, loves his morning coffee, scrolls X for memes, and recently got it in his head that he's going to be the next Wolf of Wall Street. Bob's got a few bucks saved up from his part-time job at a burger joint, and he's ready to invest. But here's the thing, Bob's about as prepared for trading as a penguin is for a desert marathon. He's heard buzzwords like dividends and bull market, but he's got no clue where to start. That's where Elder's 3 M's come in, like a trusty GPS for navigating the wild world of markets. Let's break it down step by step with Bob as our guinea pig. First up, mind. This is all about getting your head in the game. Trading isn't just numbers and charts. It's a mental battle. Imagine Bob's brain as a control room, with little workers running around, flipping switches labeled greed, fear, and I saw this hot tip on X. If those workers are panicking or partying too hard, Bob's gonna make some bad calls. Elder says you've got to train your mind to stay calm, like a Zen monk sipping tea during a thunderstorm. Why is this so important? Well, let's say Bob sees a stock called Zoom Zoom Incorporated spiking like crazy. His buddy on X says it's going to the moon. The little worker in Bob's brain labeled FOMO starts slamming the buy button. But if Bob's mind is disciplined, he takes a deep breath, ignores the hype, and asks, do I actually know what this company does? Spoiler, he doesn't. Zoom Zoom could be selling rocket-powered skateboards or just be a random company some influencer pumped up. A strong mind helps Bob avoid impulsive moves that could tank his savings. Here's how Bob starts building that mental muscle. He keeps a trading journal. Every time he makes a move, buying, selling, or even just thinking about it, he writes down why. Bought Zoom Zoom because my buddy said it's hot isn't a good reason. Bought Zoom Zoom after researching their sales growth and market trends is better. This journal is like Bob's personal therapist, helping him spot when he's being a knucklehead. Over time, he learns to spot patterns, like how he buys stocks every time he's bored on a Saturday night. That's the mind part. Staying cool, keeping emotions in check, and learning from your own mistakes. Now, Bob's starting to get it, but he's still itching to throw his cash at something. Hold up, Bob, not so fast. That's where the second M, method, comes in. This is the how of trading, your game plan. Think of it like Bob trying to bake a cake. He can't just chuck flour, eggs, and sugar into a bowl and hope for the best. He needs a recipe, a step-by-step plan. In trading, your method is your recipe for picking stocks, deciding when to buy or sell, and managing risk. Without it, Bob's just gambling and the stock market is a terrible casino. Let's say Bob's method is super simple to start. He decides he'll only buy stocks in companies he understands, like ones that make stuff he uses every day. He's a gamer, so he looks at a company like GameHaven, which makes consoles. His method includes a checklist. Is the company making money? Are people buying their products? Is the stock price reasonable compared to their earnings? This checklist is like Bob's cheat sheet, keeping him from falling for shiny distractions like Zoom Zoom's hype train. Bob also sets rules for when to sell. Say he decides, if a stock drops 10%, I'm out, no questions asked. That's part of his method, having clear exit points. Why? Because without them, Bob might hold onto a sinking stock, hoping it'll come back, like waiting for an ex to text you back. Spoiler, it usually doesn't. A good method keeps Bob disciplined, like training wheels on a bike. It's not foolproof, but it gives him a fighting chance to make smart moves. Okay, so Bob's got his mind in check and he's got a method. He's feeling pretty good, maybe even a little cocky. But here comes the third M, money. This one's about managing your cash so you don't end up eating instant noodles for a year because you bet it all on one stock. Money management is like Bob deciding how much of his burger-flipping paycheck he's willing to risk. Elder says you should never put all your eggs in one basket, or in Bob's case, all his cash in one stock. Let's say Bob's got $1,000 to invest. He might think, I'll dump it all into Gamehaven because I love their consoles. Bad move, Bob. Elder's rule of thumb is to risk only a small chunk of your money on any one trade, say 2%. For Bob, that's $20 per trade. Why so stingy? Because if Gamehaven tanks, Bob's still got most of his $1,000 to try again. It's like only betting a few bucks at a poker game instead of going all in with your rent money. This way, one bad trade doesn't wipe Bob out. Bob also learns to size his bets based on his method's signals. If Gamehaven checks all his boxes and looks like a solid pick, he might buy a few shares. But if it's a risky bet like Zoom Zoom with its sketchy hype, he might skip it or put in even less. Money management is Bob's safety net, making sure he can keep playing the game even if he takes a few hits. So, Bob's got his mind calm, his method locked in, and his money under control. He's starting to feel like he might actually survive this trading thing. But here's the kicker. The 3Ms aren't just steps you check off and forget. They're like a three-legged stool. Each leg has to be strong, or the whole thing tips over. Bob's learning that the hard way, because just as he's getting confident, he spots a new stock on X that everyone's raving about. It's called Megamoon Corp, and the posts are saying it's the future. Bob's FOMO worker is back, whispering, buy now or miss out. Can Bob stick to his 3Ms? Or is he about to learn a very expensive lesson? Let's see what Bob does with Megamoon Corporation. His phone's buzzing with notifications, and every post on X is screaming that this stock's about to rocket. Bob's fingers are itching to hit that buy button, but then he remembers Elder's 3Ms. It's like a little angel on his shoulder whispering, slow down, dude. So, Bob takes a deep breath and decides to put the 3Ms to the test, starting with his mind. Bob's brain is throwing a party right now. The FOMO worker's blasting music, shouting, everyone's getting rich except you. But Bob's been working on that mental discipline. He grabs his trading journal, yep, the one he's been scribbling in like it's his high school diary, and writes down what's going on. Feeling hyped about Megamoon. Saw it on X. Don't know what they do. Just putting that on paper makes him pause. He's starting to realize that everyone's buying isn't a strategy. It's a trap. So, he asks himself the tough question, what do I actually know about Megamoon? Crickets. Bob's got nothing. His mind's telling him to chill and do some homework before he jumps in. This is where the mind part really shines. It's not just about saying no to bad ideas. It's about training yourself to spot them. Bob's learning to recognize when his emotions are trying to hijack his decisions. Like, last week, he almost sold all his Gamehaven shares because a random tweet said gaming stocks were over. But he checked his journal, saw his reasoning for buying Gamehaven was solid, and held firm. That's the mental muscle Elder talks about. Sticking to logic even when your heart's screaming, do something. For Bob, it's like learning to ignore the urge to eat a whole pizza at 2 a.m. Tough, but worth it. Okay, so Bob's mind is holding steady. Now he moves to method. He pulls out his checklist, the one he made to keep his trading on track. First question, what does Megamoon Corp even do? Bob digs around online, real research, not just scrolling X, and finds out Megamoon's some startup claiming to revolutionize blockchain-powered coffee delivery. Sounds cool, but Bob's method demands more. He checks their financials. Turns out Megamoon's got no profits, barely any revenue, and a CEO who's been tweeting about NFTs nonstop. Red flag city. Bob's method is like a bouncer at a club, saying, nah, you're not on the list. Bob's checklist also includes technical stuff like looking at stock charts. He's no pro, but he's learned a couple tricks from YouTube tutorials. Megamoon's chart looks like a roller coaster that just went off the rails. Huge spikes followed by crashes. His method says to avoid stocks with crazy volatility unless there's a darn good reason. And blockchain coffee ain't it. So, Bob decides Megamoon doesn't pass his checklist. He's not saying it's a bad company, maybe it'll be the next big thing, but his method's keeping him focused on what he knows, like Gamehaven, where he's got a clearer picture. This method thing is a game changer for Bob. It's like having a playbook for a sport you've never played. Without it, he'd be running around the field, chasing the ball with no clue what's going on. Elder's point is that a good method doesn't have to be fancy, it just has to be consistent. Bob's method is simple. Stick to companies he understands, check their numbers, and set clear rules for buying and selling. It's not sexy, but it's saving him from throwing cash at every shiny stock that pops up on his feed. Now let's talk money. Bob's still got his $1,000, and he's tempted to toss, say, $500 at Mega Moon because, what if it moons? But Elder's third M, money management, slaps some sense into him. Bob's rule is to risk no more than 2% of his account on any trade. That's $20. If he bought $500 worth of Mega Moon and it tanked, he'd lose half his account. Half. That's like betting your entire paycheck on a single spin of a roulette wheel. No thanks. Bob decides if he were to buy Mega Moon, which he's not because it failed his method, he'd only risk $20. That way, even if it crashes, he's still in the game. Money management also means spreading the risk. Bob's already got some cash in Gamehaven, and he's eyeing another company, Snack Shack, which makes those chips he can't stop eating. Instead of going all in on one stock, he splits his $1,000 across a few picks. Maybe $200 in Gamehaven, $200 in Snack Shack, and the rest in a safe spot like a savings account or an ETF. This is Elder's diversification lesson. Don't put all your eggs in one basket, because if that basket drops, you're out of eggs. Bob's learning that slow and steady might not make him a millionaire overnight, but it'll keep him from going broke. As Bob sticks to the 3 M's, he starts noticing something cool. He's not just trading better, he's thinking better. The mind part is making him calmer, like he's got a superpower to ignore hype. The method is giving him confidence because he's got a plan he trusts. And money management is keeping his stress low, knowing one bad trade won't ruin him. It's like Bob's gone from flailing on that bucking bronco to riding it like a pro. Well, maybe a semi-pro. He's still got plenty to learn. But here's the real magic of the 3 M's. They work together. If Bob's mind is a mess, no method in the world will save him. If he's got no method, his money management is just guesswork. And if he's reckless with his money, even a calm mind and solid method won't keep him afloat. It's like trying to bake that cake we talked about earlier. You need the right ingredients, the right recipe, and the right portion control. Skip one, and you're eating a sad, lumpy mess. So, in conclusion, Alexander Elder's 3 M's, mind, method, and money, are like the ultimate cheat code for trading, investing, or even just handling your cash. They're not about getting rich quick or outsmarting the market. They're about building habits that keep you in the game for the long haul. Bob's story shows us that anyone, even a burger-flipping, meme-scrolling dude like him, can start small, stay disciplined, and avoid the traps that make most traders crash and burn. Mind keeps your emotions in check, method gives you a plan, and money makes sure you don't bet the farm. Together, they're like the 3 musketeers of financial success, one for all and all for one. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.